Hey, stranger, good to see you. Hey, Shannon. Hey, Sarah.
Hello, how
Hey,
are you, David?
how's
Good
it
to
going
see you.
so far?
Good, good. This is kind of like I'm not in the buggy eye phase of the summit, but we're getting there, right? So we're an hour, whatever this is, 3 or something like that.
Gosh,
But it's going well. It's going well. We just had Nishad, the president of Ascend, come on and kind of talk us through the PE landscape a little bit more. And then prior to that, we had the firm panel, firm sale panel, the lightning talk, and we have a couple more talks after this. So we're just in the thick of it.
You
great.
are. You're doing a great job too, David. Crushing it
Thanks.
so far.
I'm
Yeah.
trying. I'm gonna go ahead and hit start. We'll get everybody in. This is like rapid fire. Like every 30 minutes, we got a new session launching.
I
So
don't know how you're doing
Let's go.
it.
decaf coffee. All right, welcome back, everyone. I think we have some people still kind of, navigating between the last session and this one. But for folks that are hopping on, let's do a quick video audio check. You should see Sarah, you should see Shannon, you should see me. Apparently, my name is Jetpack Workflow. My name is actually David. If you didn't know this yet, type into the Q&A. Type your in the queue. Let me know that you can hear us, you can see us, and let me know, are you a decaf coffee drinker or a regular coffee drinker? Sometimes, decaf, people are offended by this concept. So let me know if that's you in the Q&A. And I'm excited to get things kicked off while we're waiting for people to chime in. I want to briefly introduce Sarah and Shannon. So Sarah's a partner at SKNS Law Firm and founder of Deal Academy, which specializes in accounting firm mergers and exits, and frequently co-presents with our fellow presenter, Shannon Hay. He's the senior VP at Live Oak Bank and commercial lending specialist, structures SBA.
Oh, United
True.
Midwest.
Yes,
It's
United
okay.
Midwest. We'll say
It's okay.
United Midwest. We'll prop it up,
It's okay.
United. You know what? I'm firing our editor here. I had all these
No.
intros, and so I should have just said, "Why don't you all intro yourself?" I mean, but
You
I-
nailed mine. It was great.
yeah,
Yeah, you're just a little off on mine, David. A couple
yeah,
years,
by
couple
like
years.
a couple years.
Yeah, no big deal.
Oh man, oh man.
Big
So
deal.
you all could tell this is gonna be a fun panel. It's very conversational. We do have great topics to present on. I don't think there's anybody that's more well versed in SBA lending and loans as it pertains to accounting firm M&A than Shannon. And Shannon, is that fair to say? You're number one?
Yeah, yeah. Well, I've done more than any other lender out there. Yeah, so over 400 for over 400 million in that NAICS code, the 5412 NAICS code. I've seen the industry change tremendously, David. I mean, not only in the past 1 or 2 years, but since I've been doing this for almost a decade, really the market has moved significantly, and love to just update people on that and what we're seeing and current structures and those types of things. So,
Absolutely. Well, I'm very excited about this. I'll let you all take it away. I'm going to fade into the background. I'm going video off, microphone off, unless something goes wrong or I butcher another detail, which I'm trying to not do for the rest of this session. So I'll let you all take it away, and then I'll be monitoring the Q&A and hop back in as you all wrap up.
well, perfect, perfect. Thank you so much for that, David. As stated, Sarah and I have done quite a few deals together. We are obviously in the thick of it. I'd say, you know, not always in the same foxhole together, right, Sarah? But
Are we in opposing foxholes?
I don't. I mean, I don't.
It's
Maybe
Christmas and
foxhole.
everybody's come out to celebrate together.
Yeah, foxholes might be the. It sounds so defensive or offensive. Maybe it's the soldier in me that likes to make that reference, but yeah, we get to see trades happening in real time and really talk to the relevancy of that. Currently right now we've closed 27 million year to date. We have another 19 million currently in underwriting and closing combined. Hoping to do another 45 to 50 million by year end. That would be the goal because we are coming into what we know as the busy season. How's your busy season going?
It's going well. I had this moment this morning where I thought, oh, what am I supposed to be doing? And then I realized it rained down on me, and I haven't
Yeah,
had that feeling in a bit. So last year I did 58 deals. As you know, sometimes I'm on the seller side. 20 of those last year were on the
yeah,
seller, the rest were buyer, and then there were like 10 internal transactions.
yeah,
Um, but this year it's been a 50-50 split, buyer and
yeah.
seller. So I'm even more you know,
That-
split minded,
yeah,
like,
yeah. You're putting
and more
yourself in two
prepared.
different foxholes, aren't you?
I am, yeah. So, I
Yeah.
mean, back to back, I'll have a call where I'm taking one stance on an indemnification clause and the exact opposite in the next one. And I'm not a person who, like, I'm pretty authentic and similar throughout the process. So,
Yeah.
the result is I'm very fair because I
Yeah.
can't just, completely change tunes on a different call. And that's what I think this industry has been really good for me. As you know, I kind of, you made my career and by
Please.
by being such a promoter of the concept of such a niche and facilitating so much. And one of the things that I think that really I'm well suited for as a lawyer in this space is it's professional services. So the deal is only the transition only happens well if the parties are friendly and
Right.
collaborative. And so it's
Yes.
not the place to have your most hard-hitting jerk lawyer, just, who loves to hear themselves talk and bill hours,
Yeah.
chest beat. It's much better situated for collaborative, business forward folks. So,
Well, and that's why I always push you for, I always make your recommendation, right? Because it's just like, us here in SBA lending as bankers, practice makes perfect, right? Repetition creates room for improvement and process. And I think that same goes for any accounting firm as well, too, is I always say riches and niches, right? As when you see that specialized, whether it's cast or whether it's industry focused, particularly on an accountant's level,
mm,
they just become industry experts and allows them to speak directly to that industry. So let's just touch the topic just so we can like kind of knock that out of the park, and then you
yeah.
can talk about some things you've seen that I want you to
How do
kind of,
you,
yeah,
yeah.
well, be
How do
my
you finance a deal, Shannon?
so I live in a space that's a little different from today because I think we've seen so many big deals, right? We're talking about gosh, Brandon getting on and then Matt and Kenji, their deal and all these monstrous transactions out there that I say hopefully that those listening today aren't all at 5 million firms, right? That there are some individually owned independent firms here, whether they're sellers or buyers. That's really my space. I know, Sarah, you've kind of went upstream a little bit since you started, and you've probably seen some bigger deals than what I do, but I live in the 0 to 5 million, or what I call the 500 to 5 million range.
Mm,
Most of my transactions are a million on average. So the independent single firm owners, usually 4 or 5 staff. Some are bigger, some are larger, and we do our share of $4 and $5 million deals as well. But the SBA is really I've lived in this world for almost a decade. It's kind of the component that exists in that what I would call balance threshold, right? 0 to 5 million space. So I'll
yeah.
just talk real quickly about. I'd love to speak first and foremost about existing firm owners buying other firms because I think it's a really unknown variable of the SBA that most people aren't aware of. That
Mm,
your existing firm is actually equity, right? That it counts as it has value, it has goodwill value. Just as if you were intending to be on the sell side of this, obviously now it does have intrinsic value. And so what the SBA says to us, by the way, SBA stands for Small Business Administration, it's a government guaranteed lending program under the federal government. Um, there's an expansion model within the program that allows if you're an existing firm owner, you can buy an existing firm with limited to zero money down. Yeah, you have to cover closing costs a little bit up first, good fake deposit, but that's refunded in working capital at closing. And you can leverage the equity in your existing business to make an acquisition for expansion with limited capital out of pocket. And so it's just an awesome thing I like to point out because most of the time David's guy or I should say customers are existing firm owners. SBA is pretty standard. And now, let's say you're a first time buyer, real quick. What's that lift look like? 10% of project costs, purchase price, working capital, loan closing costs, whatever 10% of that numeric is. $1 million deal, you have to put 100,000 in. Lots of ways to come up with equity. I could go into that. We could spend the 30 minutes talking about it, but
yeah.
just know, yeah,
Celano is different
yeah,
now,
yeah,
right?
it's changing. It's always changing. It's
Yeah.
moving. I would say cash is king. It can be gifted. You can't have investors as long as they don't have preferred equity. I know that's a tricky one for us too. We could probably elaborate on that more. And then sellers can participate in a first-time buyer's down payment. So if you're coming out of private or public accounting, wanting to buy a firm for the first time, you have a 10% down payment, you're kind of good to go. And then it comes down to, structure of the deal. I always say structure drives value, meaning that seller participation is an important element, transition participation is an important element. I know that as me, you'll concur with both of those. But real quick, 10-year term rates are exorbitant, right? Fed rates high, so are bank rates. So I'm not gonna like sell rate. Um,
Yeah.
um, no prepay and working capital is included in every deal. And usually the process is 45 to
Meaning
60.
no prepayment penalty, right?
Correct. I always say that. No one ever, yeah, you're the only one that ever like
Well,
line.
lawyer, just you can prepay
Yes,
it.
you can. You can accelerate it and you can stack it too as well. So you could have multiple SBA loans up to the 5 million threshold, right?
Yeah.
So as an individual guarantor, you go out and buy 4 firms for $1 million each, and we'd still be underneath the SBA threshold and can do those deals on 10-year terms all day long.
What?
That was the
Yeah,
short. Yeah.
that was a good lay of the land, and I think we're both resisting the urge to dig in deep because we,
Yes.
usually
Limited time.
limited time. But another thing that I find a lot of my clients don't even think about SBA financing for that, it's a little bit of a smaller fish, but it's for internal transactions. So
Yeah.
I have not, I mean, over the years, every year, it's just a notable difference in the people who want to sell their business to a partner or a junior partner or somebody who's internal who, at all. Secondly, if
Yeah.
you do want an internal transaction, there's no longer the appetite for this whole pay me 20% of collections, or we'll come up with a
Yeah.
promissory note and forgive it out of distributions every year for 10 years. Like,
No.
people want their money up front
Yeah.
because
Yeah.
that's what's market. And
Yeah.
like I have
Isn't it
clients,
strange? Isn't it strange how fast the earnout died?
yeah, it died immediately. Like, it was
Yeah, like
unbelievable, and it's y'all's fault.
well, I would,
You
yeah,
know,
I
the
blame private
SBA,
equity, but I'm
right?
kind of this is the well, I blame private equity, but I'm also grateful to private equity
Yeah,
because I felt like for so long we were fighting the earnout message from, I would
yeah,
say, the big firms, is we're the ones kind of beating that drum. And we, we've always said that look, there's this government guaranteed capital play. Why wouldn't
yeah,
you take it? Why would you do it on a short-term payout when you could take it on a
yeah,
10-year? Expand your cash flow immediately, allow you to make investments in the things that are important in accounting firms today: technology, staff, marketing, internal growth. A
yeah.
lot of that can be lost in the transition of an earnout.
Well, because maybe you're so good at your job and SBA is so ubiquitous in the 5 million and below
Yeah,
space, it really changes the market. So, any deal that cash flows sufficiently, a buyer could come in and offer 90% down the day
that's
of close
correct.
with
Yeah,
SBA. So if that's like just
yeah.
reality, why would a
Um,
seller with a cash flowing firm ever be interested in seller financing?
Yeah, I
So,
think there was another segment earlier where she was talking about tax mitigation strategy. What's one thing you do differently about selling your firm? And she was like, wouldn't sell it in the state of New York. And it's like, I mean, that's the major benefit, right, of
yeah.
making an earnout would be tax mitigation. Otherwise, I can't see any other. As a buyer, I would even if I wouldn't. First of all, I wouldn't care about a seller's tax mitigation. No offense, sellers, but buyers
Yeah.
really shouldn't be overly concerned about that. I would want the 10-year working capital play. I mean,
Yeah.
that's really, the working capital component's a huge one too that no one really
Yeah, that's
loves to
true.
talk about. Is like, a lot of times accounts receivable and WIP aren't even included in these multiples, right? So
Yeah.
there's this bridge of like first day billing zero, right? Day one bill, right? But then 30 days later, I collect my invoice. That's a lot of time to
It
pace
is a
out.
lot of time, and especially depending where you might fall in the year, right?
Yeah,
And
yeah,
how I kind of hate this term, but how chunky the accounts receivable process is on a calendar year basis for your tax firm.
yeah.
Because some of them are like 80% is in April and May, and then
Oh,
the year you have to float it, and that can be really, really.
well, it's 80% is in April or May, and then the other 20% is in September and October, and then the other months are all just
Yeah,
running
yeah.
um,
So you get
heavy
triggered.
tax practice, obviously, but
And from a seller's perspective, though, flipping that same issue on its head, I think if you're selling, why would you do, well, why are you going to be, well, first of all, a lot of people don't recognize this. They'll get multiple offers and multiple LOIs. And one of the most common things I see a seller overlook is one of them will say top line purchase price of $1 gajillion, which is of course what I do when I'm drafting them from a buyer's
That's
perspective. You throw everything in the top line purchase price, right? And then it'll say real small at the end of a paragraph, reduced by a normalized working capital amount. And it's like, oh,
oh
well, what
yeah,
is that? I mean, if you have a $2 million practice and it,
yeah,
that can be hundreds and hundreds of thousands of dollars. And how many
right.
months of normalized working capital are we talking about? It's
Yes,
huge drain on, and then they'll be comparing that. It'll say $3 million offer reduced by working capital. And then they'll be comparing it against a $2.9 million offer and thinking the 3 million is better. And you're like, they're
right.
not,
They're
you
not
read
very
the whole,
different. Well, and I'd say that's a lot of the difference between, I'd say, an independent buyer and private equity buyer,
yeah.
right? It's that a lot of, I don't know much about PE buyers, is because obviously they don't need my financing. So I know a lot about the independent side, which, they that we're the difference. We're the variable that I think makes them competitive against PE to allow for that upfront transaction that PE is offering. But then I think maybe you could probably talk a little bit more about what you're seeing structure wise from PE, maybe. I don't know, as far as what those equity carry forwards look like, and that a purchase price may look like a gajillion, right? But
Oh
then
yeah.
with that equity, what's that equity value at a future date looking like? And
Yeah, I tell my sellers like, you can get any purchase price. It's kind of like if you're a tax professional saying, client comes in and wants the biggest refund, like you can get a
yeah,
giant refund if you overpay $100,000 in taxes. You can get a giant purchase price if it's made up of like nebulous rollover equity that, the rollover entity is just a brand new company or is
yeah,
like subject to all these restrictions where they can buy it back for like a penny or it's forfeited. There's all these things, even within the like top line rollover equity, there's all these ways that rollover equity can be really, really powerful and meaningful and an enormously good investment or nothing,
yeah, yeah,
like and I think that's part of the distrust that a lot of the sellers feel when they do see PE coming in is they
yeah,
go, take your rollover equity. Like, I don't care about that because it's just made
yeah,
up. It's not always made up. Like, it's
yeah,
usually not made up, but they just don't
sure,
feel empowered to be able to figure out if this is meaningful rollover equity or if it's made up rollover equity. So I'd love to see, more experience there. Sometimes, it's not particularly meaningful. It's reduced by working capital from PE. They reduce by working capital. And then, a huge portion of it is subject to like future deferred compensation kind of thresholds. And
yes,
so whether that's not so much a retention adjustment, it's more earnout. And
yeah,
sometimes those thresholds are like 90% of historical, as long as you maintain the book of business
yeah,
90% like it has been in the past, you get the compensation. And that's great. If
yeah,
you very commonly, people will say, well, the seller really wants 7 million
yeah.
and the firm's worth 5 max. So we're going to say, 5 plus 2 million that you get if you grow the firm by doubling it the next 2 years. It's like, well, that's not going to happen. If you could double it, you
Well,
would have doubled it, right?
I
So
would do it myself, right?
yeah,
Well,
like,
we were having a conversation about an earnout structure earlier last week about, it was a percentage up front, and then there was a salary baked in, and then and it was like we were thinking about it. We said, well, if they're
okay.
making a 35% margin, why would they take one times if it's gonna? And I know I'm kind of jumping around here, but it's almost like sometimes it's almost better with some of those deals. It's just to hold, so
Yeah.
because if your net income is going to be equal to the 3 years of work you have to do in exchange for it, why sell?
Well, and that's, I think, one of the reasons that SBA continues to be ubiquitous in this space is because, that what you're saying, just to kind of back it up, is like if we're selling for 1 times gross, which was the old rule, and you're averaging 35%, collection, that SDE each
Yeah,
year. Well, okay, you got $1 million, you were making $350,000 a year. Most sellers could have just worked for another 2.8 years or something and be in exactly the same situation. So when those are the valuations, SBA makes sense because the seller has to get out of there. You know,
yeah, yeah.
they can't just hang
Well,
around. So,
and I'd say a lot of transitions we're seeing nowadays have a lot to do with like forced retirement, right? Where it's a lot of these CPAs and accountants are running too long and waiting too long to make their decision, and then forced to cash out at a lower value because they don't have the transition runway left in them.
Yeah.
Uh,
And got,
Not any of yes, by the way, but yeah. David, I think we'll just, save the last 9 minutes for questions. I think you've got an attorney and a banker on the line. I think it might be
Yeah,
probably
let's
going to get
do
some.
it. Let's do it. Sounds good. Challenge accepted. And so yeah, keep peppering questions in. We got one from Louis who said, with PE being in the game and money kind of more money being pushed up front, very favorable multiples and valuations. When a seller transacts, and they get more cash up front than they did historically, um, are they, for lack of a better word, once they get paid out nicely, are they exiting the firm prior to the full payout? So if they're getting paid up front, 60, 70% of the deal, are you seeing a lot of these sellers, they're supposed to be there for 3 years, but after 6 months, they're like, I'm done. I'm good.
um,
Well, I, well, you want to go or you want? So I'll start with the SBA side of that equation. Is that the SBA has kind of purposely put this bumper rail in there, saying that if you receive proceeds as a seller, you are not allowed to be in a key man role greater than 12 months from the date of acquisition. So this is like a true owner operator transition, right? And what the SBA wants to do is try to pull that goodwill away from the seller. They're saying, seller, you receive proceeds, so you kind of got to get away from the goodwill action. Now, this is not a compliance, this is an advisory, is that you can still hire that seller as a consultant. I'm a big believer in, I've said it many times, is relationship is what really is the critical element to transition. You and the seller want to be in a situation where it is cooperative at all times. And I think that there needs to be something, to incentivize that seller to, stay in the game, take the call when you have the emergency situation. Um, you know,
yeah, David, when I'm seeing private equity come in with that type of structure, especially, I mean, that example is low, right? 60 to 70%. They're definitely motivated to stay on for the 40%. But I find that the sellers really do stay on. I mean, I'm a small business owner myself, and I'm very similarly situated to a lot of my clients in this kind of parallel world. And it would be very hard for me to wrap it up and not
that
be
they
showing up. And increasingly, the trend I've seen this year, especially with PE buyers, they like a younger seller, which is in this industry, below 70. And so they like I'm not being cute. It's really like they like a younger seller. And what I'm seeing with my sellers is they'll start the process of wanting to sell because they're feeling burnt out. But once they start talking to PE and they start like thinking about all of the different ways that they could grow if some of the pieces that are burning them out of running their business are off their shoulders, you see this light come back into their eyes. And I think sometimes burnout is partially boredom and they get really interested and excited again. So I don't see that as a problem. I don't always have insight for the full scope. Like sometimes people don't, I follow up all the time, but sometimes they don't respond to my emails. So it might be that some of them have left that I don't know about, but the ones that I know of have stayed on.
Fair point. Yeah, it's
I
interesting
don't
when you put together materials for an exit or why somebody would buy you. It almost kind of builds your strategic plan, and you become remotivated.
Yeah. Oh, absolutely. They'll go, I don't want to work more than 2 years. And then after they start talking to some people and, everybody's doing their pitch, the buyer's pitch of what their plan is with the next step. I mean, that entrepreneurial energy is really contagious and they start to be like wanting a part of it. And it's really fun to see. I've really enjoyed watching that.
I love it. There's an SBA question for you. William said, did you say that there are SBA options for internal partner buy-ins? Also, are there SBA options for working capital loans for investment in tech/infrastructure?
So really internal buyouts is really what I would say, not buy-ins. So this would be so the SBA has a 10% equity injection requirement, meaning you have to present 10% into the deal as a buyer, right? To borrow the money to fund the rest of the deal. So for a buyout, like a junior partner that might have a low minority ownership, even if it's 5 or 10%, they can leverage that ownership into buying out or borrowing for the remainder. The hard part with a buy-in meaning I'm coming in as a junior, maybe buying 20 or 30% of the firm, is that the SBA would require that any owners greater than 20% have to personally guarantee the SBA loan. So yes, if one of your owners that has the majority is willing to guarantee the SBA loan for your buy-in, then that would be possible. I would say most owners hold the keys to that kingdom and generally don't like to do that. But what I've done in like long-term structured transitions is you have a junior that you want to sell to, you grant them or bonus them with equity in say year 1 or 2, and then in year 3 or 4, once that equity shows up on a tax return, the SBA allows you to leverage that equity as your down payment. So like you give me 10% ownership in $1 million firm, now I can give you $900,000 in cash because of my 10% ownership.
Got it. Final question from Scott. He said, from what's the starting point for a firm owner who's interested in a potential first acquisition? At what point should we engage with a lender or an attorney to advise on the process?
Pre-letter of intent, but just right before it, just this much before it, not this much before it. Like
That's
find
fair.
a deal, find the deal, and say, what do you intend to do? And then, I like to say, I always like to preview letters of intent to make sure that they're compliant, that we can fit them into the box before you actually present them to the seller. And this is one of Sarah's favorite subjects, by the way, letter of intent, by the way.
It is. And I'm that fun at parties that this is one of my favorite subjects. But it is true. And Shannon, like I want people, you don't have to engage a lawyer prior to a letter of intent, but you got to know what you're doing. And a lot of times that doesn't happen without a lawyer. I have a course on Deal Academy about letters of intent. So it's not rocket science, it's pattern recognition. But you just really want to get that right because it's very hard to change after you're under LOI, even though it's non-binding. There's a huge amount of gravitational pull to stick to it. So when I have people who engage me prior to letter of intent, I'm like, go show this to the banker and make sure that we're not promising anything we're going to have to immediately take back because it was never feasible to begin with. And almost every single one of them has something. I'll go, first question, are you taking SBA? Well, let's talk about this W-2 employment you're planning with the seller. You can't do that. So it's both of us are nice, but I agree with Shannon. I think both of us have a lot of calls with very nebulously interested buyers, maybe like 21 a week for me with people who are
210 over here, but that's
very interested in, like, they were just looking at an HVAC company. Now they're thinking about accounting practice. So, once you're pretty serious, it's a good time to talk.
Awesome. For our audience to connect with you all, what's the best way for them to reach out and learn more?
Well, I'm reachable at shay@umwsb.com. It stands for United Midwest Savings Bank.com. And you can reach me on my cell phone.
I knew you were going to say it. If you didn't give your cell, I was going to give your cell for you.
Good. It's 614-648-9199. Obviously, I'm on LinkedIn. I'm on Twitter, SBA Shay.
Yeah, I'm not giving my cell phone. But I love that you do that. I'm Sharp at sknslegal.com. Find me on LinkedIn too. I'm the Sarah Sharp that looks like me, and dealacademy.org is where those courses live.
Awesome. Well, I really appreciate the time. Got a lot out of this panel. For folks that are hanging out with us for more of the M&A Summit, next up is Jen Wilson, what to ask before taking PE. So if you haven't been playing along in the Google Doc, I'm going to paste it in here. Full disclosure, this is not a designed Google Doc. This is what we put together last minute in case you missed the calendar invite, you missed the email, or you missed the 5 emails and all the things. So they should be in your inbox. They should be in your calendar. But if not, here's the Google Doc to play along. We're going to hop into the Jen Wilson session. But Sarah, Shannon, thanks for coming on.
Thanks, David. Good to see
you. Thanks, David.
Bye, Shannon.